Hello, welcome to the Villages, Florida. My name is David. I'm a realtor with Florida Realty Investments, and I can be reached at DavidisinFlorida@gmail.com. If you're considering buying a home in the Villages and you're trying to get a good deal, or you're thinking about selling your home in the Villages and you're trying to maximize your return in a reasonable period of time, please reach out to me at DavidisinFlorida@gmail.com. I'll be happy to advise you or help you any way I can. Couple of things to note. First, all of this information is drawn from the MLS, the Multiple Listing Service. It does not include any properties on the Village's own internal listing service, the VLS. For that reason, if you are a buyer, you really should consider hiring two brokers. Without having a VLS broker and an MLS broker, you will not be able to see all properties available on the market. Similarly, if you are selling your house, you will have to decide whether you want to expose it to the market through the VLS or through the MLS. The other thing to note is that we produce this show every Monday. Make sure you check the date to ensure that you're receiving the most updated information. So, with that out of the way, let's take a look at what's happening this week. As always, we start by taking a look at what's happening with interest rates, and this is the government 10-year bond yield. This bond yield most closely tracks the 30-year mortgage rate, and so we watch it to see what rates are doing. As I mentioned last week, rates currently are at 25-year highs almost. Looking at this chart, it certainly appears as if there's room for rates to head higher. And with that in mind, I prepared this Excel spreadsheet, which should illustrate the problems that rising rates will mean for the real estate market. I prepared this Excel spreadsheet to give you some understanding as to what the impact of rising rates might be on the value of houses. To explain what we're looking at here, the first column shows rates at 2 3/4, the second rates at 5, the third rates at 7.5, and the fourth rates at 10%. So let's turn our attention first to the first column, which is with rates at 2 3/4, which were the rates in effect about 2 years ago. If you had borrowed $400,000 then at a rate of 2 3/4% for 360 months or 30 years, your payment would have been $1,600. Interest would have been $900 and principal $700. Another way of looking at this is if you could afford a payment of $2,000 a month and interest rates were 2 3/4%, you could afford to service a $489,000 mortgage. I did a show in April of last year when I expressed concern about rates having risen from 2 3/4 to 5%, and in that show I pointed out that your payment had gone from $1,600 to $2,100, but that the amount of mortgage you could afford to finance with a $2,000 payment had decreased from almost $490,000 to only $370,000. Today, with rates at 7.5%, that same $2,000 payment can only afford a $286,000 house. Even worse, the same $2,000 payment might shortly only be able to service a $228,000 mortgage. It seems hard to believe that the increase in interest rates and the resulting increase in payments is not going to have an effect on home values. Obviously, the Villages is a market that's insulated from a lot of these price pressures, but it seems as if the national trend will ultimately have some impact here at the very least. Now we'll turn our attention to what's happening in the Villages real estate market itself. This week there are 285 total listings, down from 295 listings last week and 197 listings the same week last year. Currently, listings in the Villages range from $153,000 to $3.9 million. Here I break down all of the listings in the Villages by price segment. If we take a look at the most active price segment, the $300,000 to $500,000 range, you can see that this week there are 180 listings. If you look at the chart, you can see in each price segment how many listings were in that price segment going back for the last 5 weeks. Here we take a look at all listings to get some idea as to the median listing price per square foot. This week it's up very slightly to $260.30 a square foot from $260 a square foot last week. This is still down from the $272.92 that was in effect this same week last year. Now we take a look at all listings to see how long they've been on the market, and the median time on the market for all listings this week is 48 days. an improvement from the 51 days that was in effect last week, still noticeably worse than the 40 days on the market that was in effect the same week last year. And this is our last look at all listings. This gives us some perspective as to how many listings have been on the market for 100 days or longer. This week it's 73 out of the 285 total listings. This is 26% of all listings, slightly worse than the 25% in effect last week. Now we turn our attention to new listings and pending home sales by week. The blue bars are the new listings and the pending home sales are the amber bars. This gives us some perspective as to how many homes are entering and leaving the market every week. Looking at this graph, it appears that the number of homes going pending has exceeded the number of new listings, at least for the last several months. Here we take a more in-depth look at the new listings broken down by price segment. This week, 34 new listings compared to 31 new listings last week and 26 new listings for the same period last year. New listings this week ranged in price from $175,000 to just under $1.2 million. In the most active price segment, the $300,000 to $500,000 range, this week there were 21 new listings. If you look at this table, you can get some perspective as to how many properties were newly listed in each of these price segments over the last 5 weeks. Now we turn our attention to pending home sales, and we start by taking a look at the pending home sales and what price per square foot they went pending at. This week it's $257, an improvement from the $250 of last week and higher than the $249.27 that was the median price per square foot the same week last year. Here we take a different perspective at the pending home sales and look at how long they were on the market before going pending. Last week saw a dramatic improvement from the 67 days that was in effect the week before, but this is still worse than the 21 days that homes were on the market before going pending the same week last year. And our last look at pending home sales, this is a look at what percentage of homes that went pending within 7 days of being listed. Over the last 7 days, 7 out of the 39 homes that went pending were pending within 7 days, which is 18%, slightly worse than the 19% that was in effect the week before. Now we take a look at the number of homes that sold over the last week, 32 compared to the 25 that sold the week before, and higher even than the 31 that sold the same week last year. Homes that sold and closed over the last 7 days ranged in price from $219,000 to $2,450,000. For those who are interested, the home that sold for $2,450 was originally listed for $2,900 and was sold after being on the market for 68 days. Here we dive into the homes that sold and closed over the last 7 days, and we look at them by price segment. Usually in the villages, the most active price segment is the $300,000 to $500,000 range, and last week saw 19 homes close in that price range. But we did see more activity in the $200,000 to $400,000 range than in the $300,000 to $500,000 range. 21 homes closed in the $200,000 to $400,000 range, and only 19 in the $300,000 to $500,000 range. It certainly is concerning seeing more homes close between $200,000 and $300,000 than between $400,000 and $500,000. Looking more closely at the homes that sold and closed over the last 7 days, the median price per square foot on those homes was $239 a square foot, down dramatically from the $255 a square foot on the homes that sold and closed the previous week, and obviously dramatically worse than the $265 a foot that was in effect the same week last year. Here we take a look at how long the homes that sold and closed last week were on the market. 48 days was the number for last week compared to 41 days the previous week. And it's interesting to note that the median time on the market for the homes that sold the same week last year was only 19 days. And our last look at the homes that sold and closed last week is to look at how many of them were taken off the market within 7 days of being listed. 4 out of the 33 homes were on the market for 7 days or less, which is 18% compared to 16% the week before. Now we take a look at all listings to see what percentage have reduced their asking price from the original listing price. This week, 55.44% of all listings have reduced their asking price compared to 55.59% last week. This compares to 50.76% of all listings for the same week last year. And if we take a look at what the actual decrease was, we can see that for all listings, the median decrease is currently 3% compared to 2.93% last week, and a big improvement from a median decrease from the original asking price of 4.4% that was in effect this week last year. So that concludes this week's look at the Villages real estate market. If you are interested in buying a home in the Villages and you're trying to get a good deal, or you're interested in an area of the Villages and would like to know what a good price would be, please reach out to me at DavidisinFlorida@gmail.com. I'll be happy to advise you. Or if you're looking to sell your home and are trying to maximize your return in a reasonable period of time, please reach out to me. Also, if you are trying to sell your home and are trying to maximize your return in a reasonable period of time, please reach out to me at DavidisinFlorida@gmail.com. I hope to hear from you. Take care.